Today we have with us Mr. Naresh Kumar, former General Manager, UCO Bank. Mr. Naresh Kumar is a senior banking professional with over 40 years of experience across HR, risk management, vigilance, retail banking operations. He retired as General Manager, HRM and training UCO Bank after playing a key role in shaping the bank's training and development framework. He also served as General Manager Risk Management and Chief Risk Officer, overseeing enterprise-wide risk framework and compliance system, and as Field Vigilance Officer, strengthening governance processes. As General Manager Guwahati Zone, he supervised UCO Bank's operations across the North India states of Assam, Mizoram, Meghalaya, Manipur, and Tripura. His rich expertise in credit governance, risk control, and compliance, combined with leadership experience in diverse operational roles, makes this webinar highly relevant for professionals in understanding India's retail credit market. I welcome you, Mr. Naresh Kumar, in this platform.
Thank you very much. Thank you, Gulati ji. And definitely, we are thankful to Banking Quest for organizing such sessions, such webinars. It's not only for the updating the knowledge, rather it is very relevant for day-to-day functioning of banking, in especially today's topic is retail credit. So, good morning and welcome to this webinar, and I'll start my presentation. See, as I understand that means joinees are professional and in banking sector, and they are well informed with up-to-date knowledge and having a good experience also. But still, just to remind you, that means how banking evolved. So, as you all know, just it is a brushing up of your memory. Pre-independence 1969, pre-dependence to 1969. Let us just take the rather we say that okay, look back in the history. Before independence, banking system was formal banking system or organized way. It was brought by British people, and as per my information, Eastern Chartered Bank was the first bank open at Calcutta near our head office. It was the first bank. Looking at that, our business houses also thought that why don't not to start our own bank, Swadeshi bank rather. And outcome of this, that many business houses, they started banking operations. They started bank in different names. As it was the practice that time, that means banking facility was limited to very, very limited people. Limited people means who are the limited people? Those who are elite class in the in financial terms. Rather, businessmen, people, those who are highly net worth people. So those were only the customers of the bank. So that time, who bank served? It was a British commercial interest, because it was the biggest company that time functioning across the country. East India Company, we all know. Large Indian business houses. Out of these, some business houses, they started their own bank. Purpose of starting bank was to serve their own new enterprises, new business units. Government treasuries, definitely today also it is there, the government operations, treasury operations, banks are performing. Today also it is being done. Wealthy individual with substantial deposit. Beyond credit, those who are deposit side also, customers having very high net worth. Only they were connected with the banking. After that, then no access to an outcome of this was, it was not for a common people. So no access to formal credit. No access to formal credit means to commoner. Dependency on money lenders, definitely people, those who are not having links with banking, those who are not provided with banking facility, then they were going to money lenders. And money lenders, as we all know, it is marketed 2 to 5% per month interest is being charged. And that time, lot of atrocities, financial atrocities were there. They used to grab the properties, they used to grab the jewelry. That was the system that time. Those who money lenders, but they were having not only money power, muscle power also they were having. No home loan. This regarding home loan and personal loan means if you look back around 25 years back, it was not considered as a banking credit to commoner. Rather, this home loan and personal loan product was not there itself. Only this facility was limited to bank employees. We all know this. And to certain big corporates, they were extending these facilities to their employees. This big corporate means those who are today, we in reference we can say Navratna companies of government. Outcome of this was that banking penetration was less than 1% of the total population. Then a big step was taken by the then Prime Minister, Madam Indira Gandhi, that banks were nationalized. It was first phase July 1969, 19 July it was. 14 major banks were nationalized. We can say that it was the first step when financial inclusion started. Theme was banking must cease to be the monopoly of the few. Our intention was that banking should reach to the common people. We can say it was a turning point here, that class banking was converted into mass banking. Before nationalization, it was a one particular class of society was being served with the banking facility, and after nationalization, it was available to the masses. Though it took time, it was not a that means momentary, one moment everything happened, but it was a starting of financial inclusion. What we seeing today, that means in 2006 it was started financial inclusion, in 2014 Jan Dhan Yojana, lot of development we have seen, but in my view it was the starting of financial inclusion, nationalization, first phase. This slide shows that means impact of nationalization. Wave 1 1969, 14 banks were nationalized. If let me remind you, that means these banks were nationalized. So intention was that banking facility should reach to the commoner. That time, more than 70% population was living in rural area. So it was emphasized a rural branch expansion should take place. Maximum expansion took place between this decade 70 to 80. Branches from 8,000 it went up to 35,000. Let me remind you that that time finance minister was Mr. Janardhan Pozari, and it was a policy of RBI that if any banks want to open a metro branch, that bank has to open either 8 rural branches or 4 semi-urban branches. Then only bank was allowed to open a metro branch. This was a condition was given. Rather, banks were forced to go to rural area. Today, what you see, maximum branches of nationalized banks were open during this period. Another thing is started priority sector lending. Government priority sector, we all know, means activities which are very, very important for the national development, national economic development. So those activities are considered. Priority sector activities, and priority sector concept was started from here. As we know that 40% of ANBC, adjusted net bank credit, of any bank should go to priority sector. Priority sector, in very simple term, we say it starts from agriculture and up to nowadays housing loan, export, education, this all comes into priority sector. In simple term, activity which are directly contributed to the national development. So 40% target is still it is available of net credit. Wave to the 1980, 6 more banks were nationalized. Encouraged by the experience of 1969, first phase of nationalization, government took a decision to go for 6 more, next second phase, and 6 more banks were nationalized. And what was going on, branch expansion, recruitment, manpowering, this was going on, staffing of the branches. Same time, another scheme for national development came, lead bank scheme. As we know that each state is still one bank is given lead bank responsibility. Lead bank responsibility means here that bank will keep liaison with the state government for uh, ensuring the credit flow to the needy sectors. Same scheme is a district level, that one bank is given a responsibility of lead district bank. They will keep liaison with district administration for the development of the district by providing proper credit to the activities which are very much required, and especially for the government sponsored scheme to be implemented properly. It was a time, we can say, it was a expansion phase for entire economy, for entire government activities, not only for the bank. After this 91, it started in this decade, around 85, 86, but 91 it took a shape. When Narsimhan Committee first was formed, Mr. Narsimhan was former RBI governor. Government entrusted him the job to give a study the banking scenario and give a recommendation, that means how banking system should be reformed. Banking system should be reformed means looking at the international banking parlance. So he Narasimhan submitted its report. Maximum, not maximum, I can say all recommendations now being implemented gradually. Only one recommendation, that means priority sector, as per recommendation, should be brought down to 10%. But as government could not get the desired result, and it is a necessary for the national development, priority sector is still continuing 40%. Otherwise, other recommendations, rupee converti was the one of the recommendation, reduction in CRR was one of the recommendation. These things were recommended by this committee. So this was the time that means government thought that bank not only their job is to provide banking facility, rather they should be work on viability basis. Means they have to think their profitability also, because every time it is not possible for the government to provide required capital to them. They have to earn their own capital. They have to monitor their own operation. Rather, self-sustainability should be there for the banks. It was means reforms started from here. It was means a long story. To cut short, this was the 92 report was submitted, and it was the phase. It was the phase when reforms took place. NPA concept, this what we say, this asset class in income recognition and asset classification, was the concept came by recommendation of this committee only. After that, lot of recommendation is gave, and some recommendations are now available on this slide, that banking sector should be open. Banking sector को open कैसे करेंगे? So they thought, okay, let government allow more player to enter in the banking system. Means private sectors were given license. These called new generation private bank, as already some banks were still prevailing. All banks were not nationalized. Some banks were allowed to continue as a private sector banks. They are in category wise. For reference, they called old a private sector bank in 1994 when this new bank's license was given. So they called new private banks, and today some banks have been merged in some other big banks, and some banks are still available. What we see today, HDFC, ICICI Bank, for example, just I'm telling, these are the banks. Then foreign banks expanded. It was also liberalized that foreign banks can extend their operation, definitely with certain guidelines, complying certain guidelines. Competition drives innovation. Purpose was that healthy competition should be provided. When this healthy competition should be provided, then definitely quality goes up, quality improves, and ultimately customers get benefited. This all we know. So purpose of this liberalization was that competition level should increase, and quality of service, banking services should increase, and customers should be benefited. And just means how this product developed 1992 First credit cards given by foreign banks, though it took a lot of time to get popularized. 1995 auto loans became mainstream. Citibank, American Citibank was the first bank who started this in Bombay, and today we see that means it is we cannot think of without auto loan. 1997 personal loan without guarantors. Personal loan with security was available, with the guarantor was available, but 97 it was thought that means without guarantor also personal loan should be given, because all the time it is not possible. Personal uh, people need a personal loan, but they don't have guarantor, or other guarantors are not available with them. But definitely banks need some security. Then 99 online banking, it was started in pilot banking, but we all know that after CBS completed in 2000, February 2011 it was. After that, electronic banking actually was visible in the country, and it became very common for the society. Just case has this one example is given that when this uh, personal loan without guarantors was given, to whom it was given? It was given to the salaried people, those who have proper salary account with the bank. Initially, it was salary account with the bank. Now, let it be salary account with any bank. Earlier, it was used to be an employer certificate, employer undertaking rather. Now, that's also not there. So, when these things were liberalized, result was that 50,000 homes financed in first 3 years. So, gradually means bank customize the product, liberalize the norms, and outcome of that, that this retail credit product became very popular. Now this is a so means like this I say. And one more thing here I would like to add here, that we are talking of retail credit. More thing here we had to just consider that there was a mindset shift also in the of the people. How mindset shift? If we remember around some 30-40 years back, that time, what was the concept in our, especially we can say our parents' time? Concept was pay now, use later. Pay now, use later. Purchasing power used to be very less. Purchasing power used to come by the income, net income, or from the saving what they have. Only this was the sources for the purchasing power. Loan facility was not there. So outcome of this used to be that people used to save the money to buy some product. And what was seen, it was a trend that generally people used to purchase I'm talking about middle class. Generally people, why I'm talking about middle class? Because retail credit is targeted to middle class only. It is a main beneficiary of middle class. People used to save the money, so at that retirement age, that means 60 plus, they used to, from their saving, their retirement benefit, they used to construct a house and used to buy a car. So ultimately, who are the user? Next generation. Then consumerism started, and consumerism started from USA, and definitely no country is working, no economy can work in isolation. So it came to our country also. And outcome of this was the consumerism started and concept change. Earlier concept was pay now, use later. Now concept came use now, pay later. Means buy now, pay later. And this concept is still functioning. So for buy now means how it can possible? It is possible if purchasing power can be increased. How purchasing power was increased? By retail credit. Now people no longer were depending on their net income, no longer they were depending on their savings. Gap was filled by the retail credit. It was one of the paradigm shift in the psychology of the people or consumer behavior, we can say. The retail credit took place, it took off, and now you see today that how it is growing day by day. Outcome of this was that suddenly standard of living of middle class, entire society, but especially middle class, gone up, their lifestyle also uplifted, and today we are seeing that impact of retail credit, that per capita income also increased and our standard of living also increased. Our HDI, Human Development Index, also country's position is good. Yeah. So just I wanted to refer this issue here. Now growth expansion era, 2001, you are seeing on the screen. The total retail credit was 1.2 lakh. It was just a starting point, we can say here, because lot of reforms took place. I just to remind you, 92 the Simon Committee recommendation came. It took around 10 years to get it implemented, especially credit portfolio. After that, profitability also increased, profit booking system mechanism also increased, accounting norms were also changed, and outcome of this, that 2001 onward, that means now banks became quite viable to increase. So it is considered base year. 2005 total retail credit 5.5 lakh. Housing finance took a jump from a year. It was in surge in housing finance. 2007 further increases there, 9.8 lakh crore it is. Growth rate is 78%. Personal loan came in boom here. Again, here what just I told, that psychological factor, consumer behavior factor, that this personal loan further increased the purchasing power. When purchasing power increased, then definitely lot of purchase took place, and this purchase increased the lifestyle of the society. 2008, it was a bit slump here due to global crisis. Uh, I think you can recollect. America, there was a subprime lending, global meltdown was there, but thankfully, our country was the least affected due to robust policies of RBI. Robust policies of RBI. You just see our figures that time. It was a effect was there. I told that means no economy can function in isolation. Now, after this globalization. Because Narasimhan Committee, they recommended LPG, liberalization, privatization, and globalization. So after this LPG, no country can function in isolation. All economy are interlinked. So that was it. But again, I repeat that thankfully our country was least affected due to very robust policy of RBI and very close supervision and monitoring by our regulator. 2010, it was 15.6 lakh crore, growth was 39%. It was a phase that after this global meltdown, global crisis, recovery took place in our country also. After that, what we see that main reason, so this was a means retail credit, how it is growing, and main reason for this retail growth was digital revolution. This digital revolution. As I told that in February 2011, all banks declared that means, okay, we are now totally CBS implemented. Means core banking solutions available. Core banking solution, Now, no branch is isolation. All branches are just a outlet of a bank. A customer became a bank's customer, then to a branch customer. Customer has access to any branch of bank for getting banking facility. 2012, then mobile banking app came. Today we know that means it is a very much handy. Entire retail banking operations at least can be done by, not only retail banking, all operations can be done by mobile banking. We all do even e-banking also. We can remit the money, means all of banking operations we are able to perform through mobile banking. Jan Dhan Yojana, it was another milestone in financial inclusion drive. Banks were allowed to open a zero balance account. Intention was that each household should have an account, and it implemented by all bank employees successfully. 2015 Mudra, old senior bankers may be remembering that means in olden days, lot of schemes were there. So those all schemes were brought under one umbrella, and Mudra scheme was formed, and this focus was for micro enterprise, and here also a special subset was women beneficiary. Today also means if we say approx 48% women beneficiaries are there in Mudra. UPI, then time came for remittances, money transfer, e-banking, mobile banking, the RTGS, NEFT, lot of things were there. But when this NPCI, National Payment Corporation of India, formed, they emphasize on remittances, and UPI was introduced, and today we see how convenient it is. How convenient it is. Needless to say that this COVID COVID was another factor to improve this payment system in India. 2007, by the time this Aadhaar was implemented, Aadhaar cards were issued. So when Aadhaar-based eKYC introduced, when eKYC introduced, today we see that Aadhaar-based payment is also available. 2018 account aggregator framework, it is not fully implemented, not fully implemented. One factor of this was, if you remember, that all accounts of one customer should be tagged with one ID. It was for convenience of bank, another for convenience of anti-money laundering or for taxation purpose also. It was a government guideline. 2019, then video KYC approved. Person need not to come to bank. Being at their residence and anywhere, one can send the KYC. Rather, account also can be opened through tech. 2020, we all remember, it is very recent that COVID, it was a pandemic disease, lot of hardship society faced, but for payment system, it was a boon. Today, what we say, even a sabji vendor and a very small trader also having a QR code, it was a gift from the COVID, we can say. तो जैसे बोलते हैं ना, आपदा में अवसर, तो आपदा थी उसमें, लेकिन एक बहुत अच्छा अवसर मिला ये पेमेंट सिस्टम को इवॉल्व करने के लिए. नाउ व्हाट इज करंट स्टेट ऑफ रिटेल क्रेडिट. अभी तक हमने बहुत सी बातें जो कहीं की कैसे नेशनलाइजेशन से लेके अब तक हुआ, ये उसमें एक साइकोलॉजिकल फैक्टर था कंज्यूमर बिहेवियर का, कि कैसे लोगों का माइंडसेट चेंज हुआ, और इस माइंडसेट को चेंज करने के लिए जरूरी था कि परचेजिंग पावर बढ़ाई जाए. If you remember, some around 15 years back, these dealers used to talk of cash down is only 15%, you can take a car. So it means only 15% purchasing power है अगर, तो बाकी purchasing power retail credit से मिल जाएगा 85%, and one can own a car. इस कंसेप्ट का सेकंड क्या हुआ, अनदर एक में आपको साइकोलॉजिकल फैक्टर ये बताया. सेकंड साइकोलॉजिकल फैक्टर, नाउ दैट टुडे थिंग्स आर बीइंग कोटेड इन EMI. टुडे थिंग्स आर बीइंग कोटेड इन EMI. We are not thinking of nowadays, especially young generation, they're not thinking of entire loan amount, how much loan they'll get, what will be the margin money. They think of EMI, how much do they have to pay. So this EMI culture is another factor which boosting this retail credit. And you see today in newspaper and other media of advertisement, they quote EMI. They even don't write what will be the total price, what will be the loan component of any product. They say EMI will be this much. You can own an iPhone. And to surprise, more than 70% iPhones are being purchased on EMI. Again, I repeat, this recent survey I read, more than 70% iPhones are being purchased on EMI. This is the EMI culture. Another this psychological factor. तो आज जो पोजीशन है आप देख रहे हैं स्क्रीन पे, रिटेल क्रेडिट पोर्टफोलियो कंपोजिशन, टोटल साइज इज 68.5 लाख करोड़. हाउसिंग लोन, and out of this 52% major share is housing loan, around 35.6 lakh crore, largest segment. Personal loan 20%, it is around 14 lakh crore. Vehicle loan 12%, around 8 lakh crore. Credit cards 8%, 5.5. Education loan 3%, around 2 lakh crore. Gold loan, it is not a new product, I can say. Now it is a gold loan, but people, those who have worked in South India, Tamil Nadu, in 90 hours there, so that time it was called jewel loan, and only for the agriculture purpose. But when this Muthoot private player, Muthoot Finance and Manappuram Gold, they came and they created a market pledging gold, providing loan, then all banks followed the suit, and today this is also one of the very popular component for the quick loan, not only in bank, in private player also, and that's 1.3%. So here out of this slide we can see that housing loan dominate in entire credit. It is 52%, representing over half of the retail credit here. And one more thing here, that we retail credit, whom we are targeting. Retail credit, we target the middle class of the society. As we know, any society has three classes: lower class, middle class, and higher class or high class. Middle class also can be divided into category: lower, middle, higher, like that. But overall, middle class, it is today, if we talk of total population, it is around 35%. 35%. Number wise, it is around some 45 crore today. And by 2030, this percentage is likely to go to around 47%. And figure wise, if we think, it will go around 68 lakh crore. So such a big market is available for the retail credit, because this is this class of society who have dreams, who want to uplift their style of living, who want to upgrade their standard of living, but they don't have purchasing power. This gap of purchasing power can be provided by the retail credit. So big market is available now. And why banks love retail credit? Risk diversification is there. Because the corporate loan, if we give a one loan of 1,000 crore, at least more than a lakh loans can be given to a small borrower. So definitely risk is diversified, and risk is diversified not only amount wise, rather geographically spread wise also. Because the 1 lakh loan, no player, no bank can give in particular state or particular geography. Definitely it has to be given in across India in different geographies. So chances of any vulnerability is also mitigated, very negligible it is. And multiple product. Similarly, in corporate loan, only one loan we can give. Here, multiple products are available now in retail banking. So concentration risk is also not there. So like this risk is divided, rather we can say risk is diversified. Stable income stream. Here, repayment is based on EMI. So we can expect that just regular recovery will be there. Regular repayment will get. Lower volatility than corporate credit. Corporate credit, there are many regions, there may be government policy, there may be demand of their product, there may be any natural calamity, means many things can be there that their loan can become NPA. But here, chances are very less. Better pricing power. We all know that corporate loan, they get sanction not only from one bank, they get sanction from at least 5 to 6 banks. Then who is providing least rate of interest, then only they can avail the loan. Here it is not so. Pricing is high, rate of interest quite higher we charge for retail loan. First thing. Second thing here, that people are less bothered. It means pricing is secondary for the retail borrower, but speed is the primary factor for them. Seed loan. Then another thing is the cross-selling journey. In retail, we can cross-sell the many products, starting from saving account, then credit card, personal loan, car loan, home loan, insurance, and now mutual funds also. Lot of these activities are there. Lot of financial products are available there, which can be sold and served to one customer. Product per customer. In 2010, it was 1.2. Now, various financial products are available in the market, so it is 3.8. Better returns when this risk diversification is there, stable income is there, cross-selling opportunities are there, the definitely return also will be better. When return will be better, net income will be there, capital adequacy will also increase, lower capital requirement will be there. And when net income is there for the bank, return on asset also will improve, which is one of the factors for assessing health of a bank. What will be the macroeconomic impact of this retail credit? So you see now GDP contribution 15.2% of entire credit. It is a big, very big it is here. Now, employment generated 2.8 crore. This not within the bank, beyond bank. Home loan means builders, lot of building construction will take place. Building construction is a labor-oriented activity. Car manufacturing will be there. Like this, manufacturing supply will increase. Definitely, they need a lot of manpower, so employment generation will take place. Government is also benefited. Tax revenue. Whenever there is a registration of home, registration of vehicle, taxes are there, so government also gets a lot of income. Financial inclusion. 52 crore unique borrowers are added. When liberalized norms are there of banks now, after this liberalization, further we'll see means how further things getting liberalized day by day. So a good number of borrowers are added here. Asset creation 125 lakh crore real estate value, the assets are created. Out of this, as already we told, when healthy competition is started, a lot of market players are available. So customer is also getting empowered. Bank account penetration is 80% for adult. Formal kite tax is 45% to Indians. Home ownership increased from 65 to 87%. And EMI culture enables lifestyle upgrade. As I told, EMI culture is there. People, they do not think of entire loan product, loan component. They consider whether they are able to serve the EMI or not. Key message: retail credit is driving India's economic growth and social transformation. It is not only mere a economic activity, it is a more than economic, I think it is a social activity. Housing finance is the crown jewel. Already, as we say, that 52% retail credit goes to housing sector. This is just an example is given here that if we average 28, we are able to tap a customer and giving a home loan of 50 lakh rupee, definitely he has repaying capacity. Then you see that after 2 years he can add a car. After further 2 years he can go for renovation of house, taking a top-up loan. Then he can go for PPF account for tax saving. Then by the time he'll get married, children will be there, so he can start SIP for the children's education. 45, then children will grow. By the time, definitely he has to take for the education loan. After 50, he can think of retirement, so retirement planning will be there, saving will start. And at the 60, when nothing is there, and one product is available, reverse mortgage. Reverse mortgage, we know, is totally opposite to mortgage loan. How totally opposite to mortgage loan? Mortgage loan is taken and it is repaid in EMI, we can say. But here no EMI. One can mortgage a house, take a loan that need not to repaid in EMI. Either in bullet payment, this loan can be repaid, or if he in between borrower dies or something happens, he is unable to repay the loan, bank will sell off the property, adjust the loan, and remaining amount will be credited to his or her account. So our purpose of telling here, that means if we early age we tap a customer, at least we can continue with him for 32 years plus relationship. Lot of products can be sold to him, and approximate revenue generated around 2.8 crore. So this is means how housing loan can play a very beneficial income growth for a bank. Now see this, what are the driver for this demand loan? Means how this demand loan is getting popularized day by day. Population growth, as I told, that middle class society itself, which is now around 45 crore, by end of 2030, is likely to go 68 crore. Here, middle class growth means, please don't consider that means only population will increase. Middle class means lower people can migrate to middle class by intention here. Rapid urbanization, we all know. Agricultural land is shrinking. Lot of new builders are coming up. Government is also acquiring lot of land for developing housing sites. Government means these development authorities acquiring and developing lot of sites. Private builders also coming. Nuclearization family also one of the reason. Now when both are running, definitely due to their job, they are shifting to other place. So gradually, when these joint families are breaking up, and nuclear family system is coming up, they need a separate house. Increasing affordability, their purchasing power is increasing. purchasing power increasing here, one thing. Another, prices of house also. Now housing, this house, this means real estate builders are uh, providing house targeting each segment of society, for lower income group to very, very premium high income group. Government initiative also there. Housing for all 2020 it was started. Protection to home buyers, RERA is there. So these buyers should not be cheated, should not lose their money. Allowing FDI in housing sector, this international issue. It also gave a boost to the real estate sector. Promoting digitalization of process. Lastly, promoting of eco-friendly housing, which is the need of the hour. Risk return, just say analysis has been given here that home loan, if average ticket size is 45 lakh crore, NPA used to be very, very less than 1%, 0.8% it is given here. Yield is 8.5. Profitability is very, very high. 5 stars are given this slide. LAP, loan against property, average ticket size 25 lakh, NPA rate is 1.2, yield is 10.5, but risk is also there. So profitability is lesser comparatively. Car loan, average ticket size used to be 8 lakh crore, NPA rate 2.1, yield is 11%, profitability is comparatively less. Personal loan and credit card. Purpose of here, that means home loan, such a product where NPA is minimum, security is maximum, and continuous yield is there. Rarely home loan used to be lesser than 20 years. Now 20 to 30 years used to be the repayment period for a loan. So it is a long journey that bank will keep on earning interest for a longer. Digital revolution time, this slide for purpose of telling that in olden days before digitalization, traditional method, it used to take around 30 days. It is minimum I have taken 30 days. And cost used to be around 15,000 per loan. It all the phases, all the stages of from visit to disbursement. After digitalization, it takes 7 days maximum here. Here it was minimum, here it is maximum. Now even within 3 days, 4 days, loans are available using technology here. Here, no, means system is not diluted. Stages are not abolished. All stages, all systems are entirely complied with. Only thing here is speed is increased due to digitalization. So and cost is also, you see, 3,000 per loan. Digitalization major boon is that speed with accuracy. Speed with accuracy. Features making home loan conducive and convenient. Digital transformation and paperless application now. Customized loan product is available. In customized means in olden days, if you remember, for a purchasing a land plot, loan was not available. But now a lot of banks have customized there and it is available now. Even public sector banks are giving now. Affordable housing finance. As I told, government schemes are also there. Government schemes provide subsidy, provided borrower fits in their parameters. But builders also now making a guideline for the builders that certain percentage they had to for the EWS category, for the LIC category. Green home loan is a new concept, eco-friendly. People also becoming aware now, so they are preferring this. Around 15% market is available at present for green home loan, and lower banks and government also giving concession in interest rate and registration charges. Alternate credit scoring, so far we talk of civil only, but there are other alternate credit scoring models are available. Using this credit scoring model and plus civil, further around some we can say that some around 15% more borrower are brought into the retail credit portfolio. Now, artificial intelligence driven underwriting. Quickly loans are processed. Default rate is also less. And decision can be given within hours, we can say. 48 hours to 78 hours. Digital verification and e-signature. Digital verification of document. Like for title verification, we can use blockchain technology. Now, only at present, only two states, Telangana and Andhra Pradesh, using this technology, but gradually it is coming up now. And e-signature, one can e-sign without going to branches. Co-lending partnership, further now, lot of players are available. Lot of players means beside bank, NBFC and housing finance company and this fintech, when they join together, definitely their business opportunities increases and profitability also increases. Borrower is also benefited. Borrower who are not fitting in the terms conditions of bank can fit into fintech and NBFC, and when they both NBFC and bank join together, borrower is also benefited because he'll get the rate of interest of bank and criteria of a fintech. Instant loan dispersal, speed and accuracy is there now, so very quickly loan can be sanctioned and given. These are the now AI and machine learning, how it is useful in banking financing. So starting with the lead scoring, earlier it was a manual, now ML machine learning model is available who can predict conversion, 45% better accuracy, property valuation, physical inspection was done, now it is computer vision and comparable means from government record things can be compared. 30% cost reduction by using this technology. Document verification, manual checking, now OCR and NLP verification is available. 90% time is saved, just we have to scan and get the result. Fraud detection, rule-based check was there in the earlier means manual system. Now anomaly detection using this algorithm system, easily we can detect a fraud. So 60% more frauds are caught or other frauds are avoided. Customer service, in olden days call center, now chatbot, because we know that generally repetitive type queries are coming from the customer, so that can be well replied by the chatbot and voice artificial intelligence. So 70% queries are automated. Credit decision by using this ML model and 500 variables. 500 variables you see, when they work together within no time, a better decision can be taken. So it is a means 25% better prediction and decision can be taken using this AI and machine learning. Alternative credit scoring model, just I talked, that means alternative credit scoring model. If used with CIBIL score, that means traditional credit scoring model, then what will be the impact? So what are the here technique we say? Social scoring. Social scoring means social media behavior, network quality. It further improves 50% better, and segmenting young professionals, those who are very much habitual to use social media. Transaction analysis, it is very useful. By using the UPI history, shopping pattern, we can analyze what is his consumer behavior, payment history. It gives a 22% better accuracy, and this is applicable for the self-employed people, means those who have evidence and income proof, evidence of income proof. Psychometric testing, personality assessment and risk appetite, this 80% better and first time borrower. This psychometric testing here means by personal interview. As we know that the psychology says that when we meet a person, in 9 seconds, automatically our mind reads 11 parameters about a person, starting from his attire, in his educational level, social level, release level, political level. By looking at the person, automatically our brain and tries to analyze these 11 parameters noticed. This 9-11 formula we say, by noticing this 9-11 formula, and biasing is created in the mind. And after meeting, we take a opinion, we form an opinion whether person is good or not good, then whether it is a means what will be his financial character. This all we are able to, generally we do this, unintentionally we do this. This is called psychometric testing. So this, for this we have to face meet the borrower. Device analysis, what app he using, which model phone, what location he lives. This is 12% better accuracy we can give. Generally, you see, the people, one is owning a house in posh area, so definitely we can make an opinion that he may be a money person or financially sound. GST analysis is very, very useful for the business class people. By taking GST return, we can understand the credit worthiness, it gives 35% better accuracy. We all know that whatever reflected in GST return, generally financial performance used to be better than that. So here you see that 40% more customers are qualified by using these both method. NPA increase only 0.2%. A new segment worth 12,000 crores is added. Traditional score 50% and this alternative credit score 50%. So when these both are joined together, 40% more customers are qualified. ESG, environment, social and governance integration. Nowadays, this is a new concept, but very, very important and being implemented. Environment, green building certification means those who are certified by Graha, those who certified by Graha or LEED in the America, means here concession is available. Here means what is their rain harvesting is there, solar panel they use, how much plantation is there. So these are the factors they consider. Then social factor is affordable housing priority. As I repeat, government schemes are there, they give subsidies. Same time, builders also have been directed by the government, the certain percentage they had to construct for EWS and LIG category. Third is governance. Builder rating system. This is for monitoring the building NBC, National Building Code. Same time, RERA, the registration, RERA registration is there. So this is a governance element. So when these both all the environmental, social, and governance integration take place, definitely what it gives better asset quality, regulatory compliance is more, corporate responsibility goals are also met out, customer preference alignment is there now, and long-term value creation, needless to say. Just example of co-lending revolution here, that how co-lending became useful and it is the requirement need of the hour now. Just example, if we say that means 80% uh, banks stake and 20% fintech stake and a partnership is taking place. What bank will bring? Low cost fund, CASA is there, regulatory license, bank are every time complied, well complied with the government RBI and regulator norms. Risk management, bank has full-fledged department for managing risk using latest models of using technology. What fintech can bring? Digital platform. Fintech name itself is fintech. Means originally they were technical companies which were given a license to act or provide finance, just like NBFC. So they became fintech. Means they are technically sound. Customer acquisition, they have better network to acquire customers. Rather, we can say liberal norms and quick processing using technology. How what customer will get better rates because banks cost of fund is low, CASA is more. Superior experience, fintechs, tech, faster processing, speed with accuracy, digital platform is available. Market impact, market size around 85,000 crore in 2025. Growth rate is 125 year-to-year basis. Win-win for all stakeholders. Main thing here, customer is benefited because banks funds are used for the financing. If fintech is giving their own fund, they had to borrow, then rate of interest will be very, very high. So here, after this collaboration, for this joint venture, business opportunity is there, profitability is there, and for customer it is a convenience plus cheaper rate of interest. Future technology, it's very important. Now, blockchain, at present it is pilot basis. I told that only Telangana and Andhra Pradesh, two states are using, but in future it is going to come and it will be a great impact. This title deed verification will be in minutes. IoT, Internet of Things. In India also, it started in starting phase only, but other countries, Kolatisa may be knowing more. He's living there in often in USA. Smart home integration. All appliances are internetly connected. So such type houses also we can expect near future to come in. Metaverse It is now in experimental stage only, but virtual property tours. It is certain showrooms. It is available now. The sitting at showroom, we can able to visit the housing sites available there by using AR, MR, and VR, virtual reality, artificial reality, and uh, manual reality, mixed reality rather. Quantum computing, it is also in research phase only, but now Germany, you say that means Exatel they're using, and Exatel they say that means around some 10.10 to power 18% transaction of functions can be done in 1 second. So such a high speed computing systems are going to come. When this is going to come, we can imagine what will be the speed of our customers and how fast system will start functioning. Definitely, when these systems will use, customer also getting a very speed with accuracy behavior. 5G already rolled out. Now in 2007, our country even is planning to implement 6G. Testing is going on. Voice banking, basic commands now, that if voice banking is there, 100% hands-free. Voice will be recognized. Voice will be one means important tool for recognition of transactions. Market opportunity by 2030, 100 lakh crore, 10 lakh new jobs are expected, complete digital transformation. And what will be role of banking personnel? Be ready to adapt and lead this transformation. We ahead, when we see a lot of technology is also developing. So what will be the future? Needless to say that healthy competition is available. Opportunity is there, big market is there, but healthy competition is also available. And future, what will be the future? For future, in my view, this we had to strike a balance between digital convenience, we had to increase digitalization, same time human expertise. And for human expertise, definitely skill development is a continuous process. Good training and updating in knowledge, very, very required. And this both must keep growing. Then only we can get a good share in the coming market. So here I'm concluding my presentation. Thank you very much for patient hearing. Now, if any discussion or I'll invite for interaction, if any further queries.
Sir, thank you very much for the nice presentation, sir.
Thank you,
Sir,
thank you.
frankly, sir, thank you to Tilak Gulati sir also for bringing in Mr. Naresh Kumar, sir. Such a nice presentation, sir. So thank you.
Thank you, Alok ji. Thank you very much. Yeah, Naresh Kumar ji has covered the entire subject in a very broader aspect, covering why retail credit, how retail credit emerged and it is growing, and why it is being loved by all the financial institutions. Thank you, sir.